The stock markets are crashing as a result of the tensions between Russia and the Ukraine. Today, Russia officially invaded Ukraine and all of its major defense points. Russian President Vladimir Putin made it clear that if anyone tries to intervene, they would face very strict consequences. As a result, NIO, Tesla, and XPeng have lost more than 33% of its value in a 2-day period. According to analysts, when market crashes like this happens, it is often best to ride out the downturns. Here are 4 steps investors can take to protect themselves in a market crash and still come out on top. 1. Know what you invested in. A fear-driven reaction to a temporary slump isn't a good reason to sell an investment. If a company's stock price is down, but their fundamentals are strong, eventually its stock price will rise. During a market crash, this fact will prevent you from selling a perfectly good long-term investment because of external issues. According to Warren Buffett, those who have the ability to ride out the unpleasantness of the market downturns and remain invested for an eventual recovery, which, historically speaking, always happens, are the real winners in the stock market. 2. Always diversify. When a market crash happens, you would do better if you've spread your money across different asset classes like stocks and bonds. Diversifying is the key to reducing investment risk and riding out a tumultuous market. If one stock or industry has a bad day, your other investments will help offset those losses. In short, never put all your eggs into one basket. 3. Buy the dip. Market dips are a buying opportunity for those who have invested long-term. Dips are opportunities to buy stocks on sale while the market crashes. The trick is to be ready for the dip and to commit some cash while the stock is still low. Always be ready to buy investments you believe have good long-term potential. 4. The long term is the focus. When the stock market crashes, it's very difficult to watch your portfolio shrink and do nothing about it. It's normal to feel pessimistic after a market crash, but if you're invested for the long term, doing nothing is often the best action. It's important to remember that when you sell investments in a downturn, you lock in your losses. Therefore, riding out the storm is the best action when market crashes happen. That's what's been happening this week in the world of NIO stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of NIO stocks and predictions. If you enjoyed this edition of NIO Stock Analysis and Predictions, leave a comment and please hit the like or share button, we'd really appreciate it. Are you still watching and want more? Check out last week's NIO Stock Analysis and Predictions by checking out our NIO playlist.